Welcome back to the final round on Yahoo Finance. Watching stocks here lower. We do have a bunch of big tech names to the upside, though. Microsoft is up 1.5%. Facebook and Amazon, and it is Amazon Prime Day, both up about 0.7. Meanwhile, Apple is down here on their big reveal day for their phones. The 5G announcement, and Apple shares are off just about 1.9%. So as we have been dealing with the pandemic, waiting on stimulus, there have been a number of little M&A deals recently. Last week, we had the reports about AMD and Xilinx. We had Morgan Stanley and Eaton Vance. Is there more to come in the balance of this year? I want to bring in Randy Schwimmer. He's head of Origination and Capital Markets at Churchill Asset. So, Randy, I mean, there were those deals. We also had the IBM spinoff. Then you get news about a company like AMC Movie Theaters talking about how much cash they have left. Are we in an environment where there are so many moving pieces right now that M&A activity is going to pick up?
Well, I think there's definitely a rush to the exits for a couple of reasons, and we're seeing that in spades at Churchill. Number one, I think sellers are looking at 2020 as potentially a better year to sell their business if you're a founder or an entrepreneur than 2021 if the capital gains tax regime goes to where people think it will next year, which would be a higher tax. And so people are doing the math and saying, hey, if I sell my company for 100 million, I could put a lot more of that in my pocket this year than next year. So I think that's part of it. I think the other thing is that organic growth, particularly on the consumer side, is really uncertain right now. And one of the ways to get around that is to buy other businesses and grow your business through acquisitions. So we're seeing that. And we're also seeing on the private credit, private capital side with private equity sponsors, they've got dry powder to put to work, as frankly do the private credit providers like Churchill. And right now, with rates where they are, which is pretty close to zero, people are looking to put money to work at yields that make sense for their investors.
Hey, Randy, Brian Chung here. So you've laid out a pretty good explanation of the maybe environment that allows these companies to merge. But I guess I'm wondering, can you parse out the trends in the types of deals that we're seeing? Because to me, it's been interesting. I follow the financial space. And on one hand, it's saying, these purchase prices look so good. Maybe that's why Morgan Stanley went after Eaton Vance after going after E-Trade. These are stocks that have been battered and unloved during this rally. But then on the other hand, you have AMD and Xilinx. AMD has been trading crazy high above the market, but maybe that empowers them to use their stock as currency in these deals. So are those two completely diverging roadmaps for how to approach M&A right now? Or is that really going to be the trend with this kind of bubble up that we've seen in the markets the past few months?
Yeah, Brian, so it's very much, you pointed on one of the factors, which is it's very much sector by sector, industry by industry, and company by company. One of the things that we've seen in our market in the M&A side, which is more middle market companies, is there's kind of a have and have nots. You have the businesses that are more COVID sensitive, which frankly right now the investment bankers are telling us you really can't sell because the uncertainty month to month, particularly as we go into the colder weather, of the performance relative to COVID is very high. And so creating a valuation around that is challenging. On the other hand, you have some business to business companies, so software companies, technology businesses, wastewater, specialized packaging. These companies are actually, many of them, doing better than they were pre-COVID. They have, for whatever reason, depending on the business, have a tailwind. And so those multiples are actually higher than you would have expected back in, for example, January and February. And then combined with that, as I said, the rush to potentially sell in a better tax environment this year, and you've got those tailwinds that are creating for us and for others a lot of activity that we think is going to be certainly going on between now and the end of the year.
All right, we're going to have to leave it there. Randy Schwimmer, always great to see you.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.